Welcome to Money on Tap. Money on Tap, your personal finance headquarters, where we bring out the professionals' experience and some fun in what we call three-dimensional investing, utilizing insurance, brokerage, and fee-based planning. That's what we do on this show. We look at all sides of the issues, and we bring a fully independent planning perspective to the table. Welcome. You're listening to Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap. My name is Seth Cressman, and I'm here, as always, with the one, the only, Ben Brayshaw.
Good morning, Seth.
You guys, we're Money on Tap. And if you're looking to get in touch with Ben and myself, we're financial planners. You can reach us at 855-226-8551 or info@yourmoneyontap.com. And we are going to have fun talking about financial planning and things that are of interest for us and our clients. And hopefully it works out that way for you today, too. The topic is essential.
I'm actually excited about this topic. Markets at all-time highs. And we're going to talk about reversals versus pullbacks. What's the difference? What kind of bubble are we looking at here? Is there a bubble? All those kind of things, and help people try to make their own decisions on some of that stuff and try to understand, the market around us. Because honestly, for an economy that has a ton of states shut down and things going on, it's like, how could the market be doing so well? And, should I be investing now or not? I mean, what is did I miss the boat? I don't know.
That ship has sailed, folks, or not. It's good to be jumping into this topic. And but before we do that, we do this little thing called Money in the News. And it's going to happen right around the corner. And if you haven't picked up the phone and given us a call yet, it's a great time to do so. And operators are standing by. As always, you guys, I need to just get to Money in the News as quickly as possible. So without further ado, it is time for Money in the News. What is new with RMDs? What in the world is an RMD is usually the question that we're answering first out of the gate. So it stands for Required Minimum Distribution. Now, if you have an IRA or a 401k, we call that qualified money. And a required minimum distribution is what used to happen at age 70 and a half with that money. And you were basically required to take money out of your IRA. And whether or not you wanted to or not, that's what the IRS would say. Age 70 and a half, guess what? This is the calculation based off of where your account was December 31st of last year. And this is the money required for you to take. If you do not take that distribution, it is the heaviest fine you can possibly get levied against you in your taxes, and it's 50%, folks. So it makes a lot of sense to take that RMD. But last year, COVID hit was what we were all talking about. Guess what they did? They said you don't have to take your RMD. And they also had changed the age to 72 before you had to take that RMD.
Those are some big changes. I mean, changing the 70 and a half to 72 is a big deal. I mean, that was something a lot of people wanted. What's actually interesting, Seth, is the article over at MarketWatch goes into the fact that there's a lot of bipartisan support for the idea to move the RMD age to 75, and that would delay that required minimum distribution of your IRA funds off a little longer, allowing people you can work longer. It opens up some more avenues. I think they're trying to expand the idea that people can work longer because people are living longer, which is proven scientifically, but also recognized by the IRS with their new tax tables for 2022, which says basically everyone is, everyone's living longer. So theoretically, the spread of your retirement funds could be longer, which actually has reduced the RMD percentage down to, so the amount you have to take out is like 6.5% less than what it normally would be. which is kind of interesting. It doesn't sound like a lot to a lot of people, but if you don't want to take out your RMDs, which a lot of people don't want to be forced to do that, and they're trying to deal with one tax scenario or another. I can't tell you how many people are like, oh gosh, I don't want to take out the RMD. What am I going to do with that money? Well, that's not everyone's scenario, right? But we don't want to really sound cavalier about that. But there are points in times where even taking out your RMD because of other scenarios that happen, maybe you had a consulting role, or you got some money passed on to you that's going to be taxed as ordinary income through maybe an annuity or something like that, which happens all the time. All of a sudden, you don't want to take that extra income out that year and get taxed and push it into a higher bracket.
I think you nailed it. I don't have anything else to add to that, but I love this next article. So a 90-year-old, now this is Wall Street Journal stuff, folks, this is Vice.com. But a 90-year-old North Hollywood resident, Aaron Epstein, has been with AT&T since the 1960s. He has been with the company so long that he witnessed the 1982 breakup of Ma Bell. He watched as the telecom giant slowly but surely reconstituted itself, and he even still has a Pacific Bell email address, despite the brand being discontinued in 2002. So why would we even bring this up? Because, well, he was so frustrated by AT&T's failure to upgrade his internet from 3 megs that he took out a quarter-page ad in the Wall Street Journal just to tell AT&T what he was thinking about that.
He even addressed it to the CEO, John Stankey.
Oh, my gosh.
He's like, can you imagine? Hey, listen, you guys, you kind of missed a portion of Hollywood in your, internet coverage.
Hollywood, right.
It's not even
Hollywood.
This isn't like you guys living on a farm in middle of nowhere, Wisconsin or something, or, Idaho or whatever. He's like, I'm in North Hollywood and I can't get more than 3 megabits. Hello, AT&T. Let's pick up the pace here. But honestly, if he's had this many frustrations with AT&T over all the long-standing years, there's no pride in keeping them and remaining their customer. Like, dump them. I mean, that's what my wife and I, when we don't like somebody or, some company or something or what they're doing, we stop doing business with them. And enough people do that. That's a real story. I think, but anyways, hey, listen, he's got a long history with him. Maybe it's, I don't know, who knows? Maybe that's, first phone call he ever made and, all sorts of stuff behind it. But listen, AT&T, you guys got to get your acting gear because that is embarrassing.
Yeah, I don't know if he was trying to get some Netflix or figured out that streaming just wasn't going to work, or, he was sitting there with the old modem that was doing the ring and the scratch and the ring to try to connect. Just get that service in. Oh my gosh. 90-year-old. That's hilarious. I love it.
I mean, North Hollywood, that's special. That's real special.
Yeah. Ben, would you do us the service of bringing us into this next article?
Wow, this one gets my goat, Seth. I'm a little anxious about talking about this because I might get on a tangent here, but Dallas Mavericks have stopped playing national anthem before home games at owner Mark Cuban's direction. Now, it's funny because we were talking, I think, at one point, I don't know if this actually made the show or not, but they were talking about how Mark Cuban would probably run for president or something like that. But it's like, here's a guy who's like, we're done with a national anthem. In reading this article on ESPN, there's a lot of information here. And this was something that really kind of got my goat because 3 years ago, Mark Cuban was talking about how we need to stand and, he covers his heart and everything else. And now he's saying that due to the changes in awareness, we need to do this together. So he's mitigated the situation by now, I guess, saying he would kneel or he would do whatever the organization would do as a whole, and join in, which I find severely disappointing, and everyone who's heard this show knows that I don't agree with that. Having family in military, respecting the military, I think that our flag and what it stands for has nothing to do with the argument, the protest that people have. Those are two separate items, and the fact that they have drawn those together is just disgusting. I think if you want to kneel for our flag, you can leave our country. That's your choice. That's your freedom that this country provides you. Other countries don't provide that freedom. So that's where I stand on this. I think what's really interesting, and I think what is absolutely crazy that people don't know, is that the NBA, I'm quoting the article here, the NBA's rule book requires players to stand during the national anthem. That is a requirement in the NBA rule book. So not playing the national anthem is also breaking the rule book. These people need to be kicked out of the NBA, and I'm glad that I have not watched one game this year, and I am part of the hundreds of millions of people who haven't. And if they haven't figured this out yet, they eventually will, because like any customer, I choose to do business with whom I choose to do business with. I also haven't watched one full Super Bowl, football game this year until the Super Bowl because my kids wanted to watch it with their friends. So, you know, I'm not going to deprive them of that one thing over this, but I'm also not going to give these people my business. And this is the first year in probably a decade I haven't done fantasy football either. So, hey, listen, if anyone's listening to this thing, you're not alone, because there's millions and hundreds of millions of people out there that do this. And I think Mark Cuban, this is an insult to most of America to not even be playing the national anthem. Maybe it's his way of just saying, hey, listen, you know what, let's take this whole thing out of that scenario so we don't have the debate. But now they won't even film what the players are doing. That's the whole game now. They don't even take a picture of the players kneeling during the anthem. That's what's happening at the games. I was just talking to somebody about that. So I don't know, Seth. That's my thoughts.
Well, the Blazers are the biggest deal that we've got going on over here in Portland, and I have watched some of the games. I know that it's been a discussion on in our house what we've been seeing as far as the players kind of protesting in different ways or making statements in different ways. Jerseys and this has just never been one that I've even thought would enter into a conversation, that we would not respect the country that we're in, that has given us so much opportunity to the level that we're clearly stepping over a line that I just can't even. I don't know what to say. Don't know what to say.
It doesn't make sense. I'm not gonna. It's required by it's required by the NBA itself. I mean, yeah. If one of my employees decided to step out of line inside the rules of the SEC or FINRA, you would be terminated instantly and liable. So so the NBA rules don't apply. So when you travel, the NBA rules, they don't always apply.
Yeah.
When do rules always all of a sudden are they optional? And first of all, anyone who tries to tie these things together, that is honestly the most asinine connection you could possibly make. The American flag, which grants freedom, and the things that we enjoy, don't correlate to all the things that they're claiming this is. Because you know what? It won't be this rebellion piece that's going on, or this protest. It'll be another protest that they're kneeling for. There's a platform for everything. Don't offend millions of people that have, of all race, creed, and color, okay, for various reasons over one item. Like this is you're going to build more awareness doing it in a way that doesn't bring more offense to something else that people respect and have died for. And that's where I think the misgivings are here.
I'm going to second all of that. Said very well, beautifully. And not to really shift gears too much, but if you have been paying attention to the Celtics, which I grew up being a Celtics fan because my grandfather was a huge Larry Bird fan and Kevin McHale. And so we grew up watching a lot of the Celtics and rooting for them throughout those LA battles back and forth for the titles in the 80s. But one of your Celtics that's just been lighting it up this year is Peyton Pritchard, who is a former University of Oregon Duck. And I was so happy to see him go to the Celtics. And I just love watching that guy play ball because he brings that Larry Bird blue collar work ethic and hustle and humility into the game. Just a baller and wants to play so hard, heart and soul. I love it. And you guys, you're welcome. we're happy for you, and I'm tuning back in to watch the Celtics and when I get a chance here and there.
Well, that's going to do it for Money in the News and our little political rants on the place we speak so freely. And I want to personally thank everybody who has fought, died, been wounded, come home for this country. I can't say thank you enough for the freedoms that we enjoy every day.
Thank you so much for what you've done and what you do. Folks, that's it. Money in the News. We're going to come back here in a minute, and we are going to be talking about bubbles. I love the word. Bubbles. Is it a reversal? Is it a bubble? What's going on? It's going to be a lot of fun and really, really critical conversation for you to have. Whoever you're working with at the moment, if it's not us, then get this conversation down. You're going to love it. We're going to have fun. We'll be right back. You're listening to Money on Tap.
Call us today at 855-226-8551 and get your free consultation with Ben Brayshaw or Seth Krussman or any one of our partners and find out what's going on in your plan, your estate plan, your financial plan, or what you're planning at all, if nothing. Get it fixed, get it right, get it done today. Give us a call at 855-226-8551.
Now back to Money on Tap with Ben and Seth.
Welcome back. You're listening to Money on Tap. My name's Seth Krussman, and I'm here once again with Benjamin Brayshaw. Thank you so much for joining us today. You can reach us at 855-226-8551 or info@yourmoneyontap.com. And you are listening to Money on Tap. And today we are going to discuss bubbles because it's just so much fun.
And not the blowing bubbles at the beach here, guys. We're talking about the stock market. Boy, there is a lot of conversation around whether or not we're in a bubble. We're hearing conversation, right, Seth? I mean, from some of the foremost names out there about concerns of a bubble. And I think before we even started doing the show, Seth, you brought up the guy Jim Cramer on CNBC, who back in, 2013 declared a bubble.
Yeah. Just look back any time that we've hit a new high in the market. This is going to be the conversation that everybody is having on the television. We're looking at our portfolios. We're talking with our clients about it. There's concerns anytime that you hit a high because it could not stay there. Does it stay there or does it pull back? And what sectors pull back? What's the thing that's going to make the market get afraid and start to run? It's just fun to take a look back, and you can just research Jim Cramer anytime that we've hit a high and just, what did Jim say? Because he's, he does it. He talks a lot.
He's a little crazy, I think he does a good job. When I do see his show, I do think he does a good job with the interviews, and that's, he asks the right questions, I think, most of the time, and I think that's important. But, as we do, you're so right, Seth. I mean, people are looking at their own portfolio. We're evaluating our portfolio on a daily basis. It's just going through trends and shifts and gains and what's moving. And I hear in the news the tech sector is skyrocketing, and when is the tech sector gonna burst, right? When are we gonna have that next pullback? And it's not that I think the thing is the whole conversation around a bubble in our stock market is not that it's going to implode and you're going to lose all your money. It's that you're going to lose a significant amount of money that you don't want to lose, and you're going to have to wait to get it back. Right? I mean, that's because the concept, if you're an investor, a long-term investor, you're thinking that I'm going to ride these waves, and people think that they're always going to be standing up on the board, and they forget that there's always the tumble. There's the end of the wave that you're going to have to settle into, reallocate, readjust. And can you get out of the bubble kind of near the top of the wave? And no one wants to miss the entire wave, right? There's that greed factor inside here that's so dangerous. And So I think this is a good conversation to have because the market is at all-time highs. We have indice after indice. Today it's this, today it's that. These two hit today, and it's a constant conversation. Yet we're coming out of a pandemic. I mean, some of these numbers, some of these things, it's hard to find justification for even some of them and why they're doing it, and it's a little crazy. It's a weird time. So we put together kind of the 5 core stages that kind of involve a bubble. And you're going to see probably some of these or feel some of these are live and well in today's marketplace. And the question is your feeling of a degree may be not as high as the degree we could be getting to in a bubble. The bubble could be bigger than other bubbles, right? And it could last longer than other bubbles. And we've lived through a few bubbles already, and we're getting ready for maybe another one here. I don't know if it's 5 years out or 1 year out or 1 month out. So that's how do we define that? So the first one we have here today is displacement. Now, displacement is really just the innovation inside something. Like it's in our world today. I would say it's the battery powered car. It's the innovation of that, right?
Yes, 100%. There's just take a look across the board. There's Tesla, NIO is another one, and I'd say those are. I mean, I think it's been 1,500% return on NIO over the last 6 months, and if you look at the underlying fundamentals, which should support why people put their money into a stock. I mean, this is going old school. This is Buffett. This is why you buy things that are like a value stock, which would be something that is kind of been discounted unfairly, possibly in terms of its right now price that you can buy it at, because underneath that is an asset that is doing well. This, on the other hand, NIO is it's not. It's been propped up by the Chinese government. It's been again, 1,500% return, I think, on it is, it just doesn't make sense. It's an industry. Let's take a look at Tesla. 5th largest in the S&P 500, I think, is where they're at right now. And
Elon's the wealthiest guy in the world right now.
Yes. And they definitely, I mean, by market capitalization, which means, how much money do they have in the market surrounding it right now? It is not it should be the biggest car manufacturer, most profitable car manufacturer that we have ever seen in the history of the automotive industry, but no. So
no, there's a whole story. There's a whole story of innovation behind it, which is the conversation of the battery creation that they have. I mean, I've listened to analyst after analyst say, no, I'm not evaluating. I mean, I just heard that Tesla stock was some analyst came out with $1,200 on Tesla stock. Hard to believe? I don't know. I mean, I really have no idea what Tesla... I mean, they're just predicting what the stock's going to go to based on various analysis and this. And his number one thing that he kept saying was, we're not giving it... It's not a car company. And everyone's like, what do you mean it's not a car company? All analysts look at this as an innovation of vehicle and battery innovation. Power innovation is all what Tesla's wrapped up into. It's solar. It
just happens to be the car is what they're what they're creating for the marketplace
today.
But really behind it, it's this whole innovation that is taking place.
Yeah, it's exactly. It is this complete conversation of future development, and they keep wrapping little pieces
living
in this
on
car.
Mars.
Yeah, living on right. I mean, he wants to have people living in space, and that's sounds interesting for a while. But that's
can you believe you said he's the richest man on Earth? I'm trying to think if we have anybody else living on the moon.
Another planet.
Else that
Let's just limit it to Earth.
What are we doing? Yeah, but richest man on Earth, right? this has been a couple of months now that this has been posted, and that's congratulations. That's really cool, but why? Because Tesla.
Because the stock is worth so much. This is one of these things that displacement's really hard to understand, because displacement and innovation and that concept could just be driving the car in a different direction, right? I mean, it could be taking our whole market into a different world. And I think that is actually happening in a number of places, right? Because you're looking at, people are talking about lithium and, you're talking about all sorts of different components that involve this that are now exploding other marketplaces. And now the people are making money in parts of the market that they didn't make money before. And that innovation has, continued to develop that. I find it interesting because some of the old assets drive, no pun intended, we were talking about how oil and gas, it helps manufacture everything in our country, from plastic to steel to this, that, and so you can build all the electric cars you want. It's still going to spend a ton on oil and gas.
So I really do love the Tesla story. I think it's a great example for us of possible bubble. I would probably lean more towards NIO, just because I think you've got some government aid happening there with a automobile that hasn't really put a whole lot to the market, brought a whole lot to the market. But anyways, as we're talking about this, it reminds me, and I've shared this before, this reminds me of, a portfolio manager that I used to work for years and years and years ago. And one of the things I brought to him was Amazon at $112. And he pulls me aside and says, "Son, let me explain something to you. This is what we call a Wall Street darling." And the rest of it just kind of sounded like Charlie Brown's teacher, wah, 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 because I went, you don't get it, do you, at all? And you're not even willing to even take a look or think about what this could be. And they're not profitable. They weren't. They had not turned $1 of profit at that point. But I look at Amazon now and I'm like, oh my gosh. And love Jeff Bezos or don't. I'm just looking at it purely from a profit perspective of what you could have done and owned for your clients, but you just were stuck in a way of thinking that it worked. It worked for the 1980s. It worked for 1990s. And I got to tell you, folks, this is not that market. And I think that's one of the things that we're going to eventually come back to. So we've talked a little bit, shared storytelling time with, Seth and Ben. That's always fun. What about this? Okay, so we talked about displacement. What is that, right? Ben, did we actually clear the table here on displacement? Or
I'm good. We got innovation. I think people understand innovation. I think they understand how that can re-steer the market in a different direction. Tesla's the obvious example in today's marketplace, and how it can, everything else can, be part of that. And it's just dragging companies that I kind of see it as like it's got all these ropes tied to all these other companies that are dragging them, and lithium companies and, plastic companies and everything. They're all, you talked about NIO, but there's Arcimoto. There's all these different car, Nikola and all these other different car companies out there.
Oh, not Nikola.
Oh, I know. It's horrible. Okay. But
that's your bubble right there. That's your classic, oops, that one got drug into the mainstream and should never have hit Wall Street.
No. Then you got the boom, right? This is when everyone starts hearing a little bit about it, right? And then they starts gaining momentum, and everyone says, you know what? 5 years ago, 3 years ago, hey, Tesla's interesting. Maybe I'll buy a few shares of that. I remember I was, auditing trades on Tesla many years ago, and, the guy was saying, yeah, this guy's trading to Tesla. It's just up and down, up and down, up and down. And it's just so volatile. And, it was very speculative at that time, but it was gaining momentum is what it was. And I think the thing about momentum is this is the time that you really want to be in the stock, right? You don't want to sit around and wait for the momentum to rise up because there's other things out there that are getting momentum. There's other things that have better investment opportunity. So, 10 years ago, I didn't own Tesla. Today, I do own Tesla. And I've enjoyed momentum. And that's part of it, right? And I'm not personally sure either way whether the Tesla momentum is in or out, but I've traded it. I've sold it. I've bought it. I've sold it. So there's different things I've done with that stock. Do I think electric cars are here to stay? Yeah, I think they're here to stay, and some version of it. And I think Tesla's going to be the leader for a while. That's kind of currently my personal opinion. Being part of this momentum phase, this boom phase, is really, really important because this is the wave. This is the core portion. Right, Seth? I mean, Seth's a surfer. I'd love to say I could surf, Seth, but Seth has seen me try to surf, and it is an embarrassing experience. I think I did officially get up once, but not quite my thing.
The ocean will humble you, my friend.
So, anyways, it's that riding that wave is in the momentum phase is great. This is really, really good. And then we get where, Seth?
Well, I want to talk a little bit about momentum because when I'm looking for opportunities, I'm looking for momentum. There's some things that I want to see in a stock before I put money into it for my clients or myself. And momentum is one of those. I want to see, we're going back to like some fundamentals where I want to see profitability. That's a key thing for me. But almost more so today, I want to see that the market has started to come into this idea and put money towards it. Now, when you see big money do things, you pay attention. And usually that's a part of what we'll start to see as momentum. The chart is going higher, and it might be volatile. It might be up and down. But overall, you've seen a lot of money start to come into this, and so getting things early is what it's usually all about. And catching that momentum as quickly as you possibly can, and being able to understand what your parameters are around trading that. Like if it goes down 20%, you probably have some rule that says, we're not going to take that. We're not going to go down 20%, but down 5%, down 10%. This is a threshold that you need to already have in mind as trade rules apply to understand that is going to take place. Up and downs are going to take place. But overall, what you want to see is that momentum. But we're talking about bubbles because, how long does a good thing last? And euphoria is the next thing that we notice about these trades. And this is the phase that basically everybody says, I don't care if it's profitable. I don't know what it is. I'm just going to put money on this and make some money. And who cares? Look at me. I'm going to be great because the next thing you know, everybody's in. Everybody's going for it. And the idea doesn't, it doesn't even matter where prices go. There's just going to be a market of buyers willing to pay more. And this is, you almost call it kind of like a greed bub, a part of this whole process. But, here's an example. Right. In Japanese real estate in 1989, everybody remembers what happened in Tokyo in 1989, right? Well, we're going to talk about it so that if you don't, you can have that conversation now with whoever's at your water cooler. So anyways, the land in Tokyo sold for as much as $139,000 per square foot. $139 per square foot. Figure out whatever you're living in right now and just go ahead and multiply that by 139,000 to figure out what does that really mean. This was 350 times the value of Manhattan property. And similarly at the height of the internet bubble, which was March of 2000, going back a few years there, the combined value of all technology stocks in the NASDAQ was higher than the GDP, gross domestic product, of most countries. Okay, does that mean that everything's going to fall out of the sky? No, it may not. But it's an interesting. It's what we're trying to show you is people just had kind of lost their mind, so to speak. That's euphoria.
That's really well said, Seth. I think the thing about euphoria that really, it's a drug. It's the thing that makes you keep going. It's the, oh, I'm up. It's not investing. And this is where, I would say the emotions get the better of investors, right? I mean, this is just where you're not analyzing assets. You're not doing things, it's not going over that. And you have to look at these different pieces. I think as we go through the euphoria stage, there's kind of some subsets of evaluation that I would then intrinsically take a perspective of. And I would look at whether or not there's like two things going on. The first is I would look to see if the assets you own are historically expensive. Historically, I would look at it and say, how does this look over 1 year or 5 years? And in today's world, that's really easy to do because we had a pandemic. And so if we're in recovery, then the simple answer is, are we close to its 1 year equivalent or its 13-month equivalent? We're going to be getting to that point here. We're going to be looking past a year. And if you're getting to there and the company hasn't recovered, I would say owner beware. Holder beware. The second thing I would then look at is, are the companies continuing to buy back their own stock? If you're not seeing share buybacks in some of these areas, like that's something where the company's saying, we think our stock is potentially overpriced. It's not cheap anymore. And those are things to look at as well.
Good stuff. Oh my gosh. This plate right here in front of me that we are working our way through and digesting at the moment is good. It is incredible. I cannot wait to jump back in here with we're going to talk more about what are the phases here of a bubble, but then we're going to get into a little bit of what are people saying? What do we think? And we're going to try to apply some logic to what we're doing here today at Brayshaw Financial Group and Money on Tap. You're listening to Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap.com. That right there, folks, that number and that information could be the difference between you and a successful retirement. That's what we talk about here. Three-dimensional investing is what we're doing here at Money on Tap. We appreciate you joining us today. We're going to take a quick break. We'll be right back. Don't go anywhere. Folks, we have a lot of fun doing this show, Money on Tap, and Ben and I have been financial planners for years and years, and our goal here with you is to bring you into the room, have the conversations that we have. We think these are critical conversations for you, but we understand this is a limited space. And what we'd love to do is to open the doors to you with us at Brayshaw Financial Group so you could experience what it means to have three-dimensional planning in your life. Let's take a look at all sides of your situation, your scenario, and see how we can put together the best plan possible, taking into account your risk. How much can you have in the market? How much do we need to have set aside and doing different things for your life? That's what we do as planners, how we engage with you, and we welcome you to do that with us. You can reach us at 855-226-8551 or info@yourmoneyontap.com. Now, if you have $250,000 that are investable assets today, our planning is free to you. We want you to have the playbook to have a successful experience in retirement. Give us a call, 855-226-8551 or info@yourmoneyontap.com. Ben and I welcome you to Brayshaw Financial for complete wealth management.
Now back to Money on Tap with Ben and Seth.
Welcome back. You're listening to Money on Tap, and aren't you glad you are? Because we are talking about bubbles. You can reach us at 855-226-8551 or info@moneyontap.com. Bubbles.
We talked about three different things, folks. If you're just joining us, we talked about the concept of the stock bubble, the idea of innovation, the concept of momentum and the boom phase. We talked about the emotional, like euphoric experience of the top of this wave and looking out over the horizon and you're above the water. There's kind of two ends to that. Either you're going to crash and burn at the end of the bubble, okay, which we don't know where that is, or you're going to take some profits. I think that's one of the things that people don't really, take a concept on. And I think, honestly, this year is going to be an interesting profit-taking year for a lot of reasons, okay? I think, somewhere around May, April, maybe June, there's going to be a lot of, interesting shifts in the market. I think we have, 3 to 6 months, really, before we see anything. I think. I'm not predicting anything here. Before we could see something tragic. And the reason I say that is because a lot of people did reallocations in April and May. They got to different places. I mean, even June and July. I mean, people are making shifts, trying to mitigate risk, lower volatility, address the time horizon of what they thought things were going to perform under. Did it meet, all the investment objective scenarios? People were moving all over the place for all of the kind of compliance reasons that exist out there. And we do those naturally. Well, people don't want to take profits usually before that kind of 1 year end, right? So 12 months later, long-term gain on most of these non-qualified assets. So if it's an IRA or a Roth IRA or any of those different retirement plans we've talked about, people are buying and selling all the time and they're not worried about it. People in the non-qualified space, meaning the kind of after-tax dollars where you open up your own little brokerage account and you buy something, you want to hold it for a year so you're, kind of paying that, well, you not kind of, but you are paying that long-term capital gains tax, which is traditionally lower for most people. This, I think that's a big deal. And honestly, I think that sends us on the trajectory of this summer being kind of like an interesting pullback period. I don't know, but I mean, putting those things together says something to me. And then someone would say to me in rebuttal, Seth, well, why wouldn't they just hold it for another year? Why would they sell it in, when a year's up or cycle that? And I would tell you that they could. Matter of fact, they could hold it for years and years and years. And they may hold it to the end of this year. And I could be completely wrong in kind of thinking summer might have some doldrums in the financials. But I also know that we have some new tax codes coming. I also know that we're going to have new capital gains rates most likely coming that are going to be higher, much higher. And I think people are going to want to cycle some of their tax dollars in the short and long-term cap gains. They're not going to care. They're going to want to just cycle it through. Why? Because I'm going to. That's exactly what I'm going to in some of my assets. Trust me, I'm going to cycle all of my assets this year because I don't want to have to subject those assets to a new tax code next year that has a different capital gains rate that I'm most likely going to be subjected to because my cap gains rate's not going down. That I'm pretty sure of. Those are my thoughts.
So taking profit is what we're talking about. And Ben, you brought in several different reasons that, from a personal standpoint, why you are going to be taking profits. And currently it's the tax rate that you can take the profits at right now. In other areas or other pieces that are important for people to grab hold of here is kind of where we've seen a lot of gains in certain stocks or sectors or the whole market that people are saying, and these are seasoned veterans of the industry that are managing a significant amount of money that are saying, okay, we're going to go ahead and just take a breath. We're going to take a breath. And that's what happens a lot of the time when the market hits these new highs. And what are people doing? They're taking profits. They're just saying, we're going to take some of this off the table. Some of that happens as innocently as a portfolio rebalance. Okay, that's one of the things that we want to make sure that you're doing is taking a look at your 401k. And as, whatever your small cap holding has just done tremendously this last year, is it out of the percentage that you originally intended for that to be, and you rebalance. And over time, that has given us this, that has shown us it's an effective way to over time have a better solution down the road. And how many people we talk to that are like portfolio rebalance? I can do that in my 401k or whatever your however you hold those. Yeah, you can. And that's what, at least at a minimum on a yearly basis, you want to take a look at that and at least try it. Just do the best you can to rebalance that portfolio. So some of this is going to happen during these periods of time, and it's not necessarily going to be the investor out there saying, "Oh man, I'm up 1,000% in whatever stock, and I need to just dump it." There's going to be some of that, and that's what this is talking about as well. Is like people really looking at the market from a perspective that it has done or accomplished what they set out to do. It's given them a 10, 15, 20% return or something. Let's go ahead and take the profit. We're going to go into something else usually, and or just even hold it into a cash holding for a period of time. That's what we're talking about here, profit taking. So, okay, well, I think we're over that one. So what about panic? Because I think that's the final place that people get to is after investors have been taking profit, there is panic. And what I want to say about this is one of the most easy things for us to come to and say, oh, clearly we have a bubble. And the panic was this last year, February, March. That's panic in the markets, folks. The market doesn't understand what in the world, what is happening. They don't know. It doesn't know how to react. And the market does when it doesn't understand something is it says, we're out. Let's get this money out of here and protect it. So we've gone through that this last year. Now, the question I think that people need to look at right now is, are we in some similar circumstances here? I think we could see people taking profit, for instance. But I don't know that anybody right now, and I mean, maybe people would have panicked about the presidential elections. That might have been something that people did panic about and took a bunch of money out of the market. But it looks to me as if people are closer to a boom euphoria phase than taking profit or panic. It looks to be like more of a front end. I know it's not something that I'm going to try to quantify here. I'm just trying to take a look at what's going on right now and what are people doing? How is money flowing? Those are the places where it looks to be. So what would I do with that? What do you do,
Seth? One of the things you're making some great points about panic and concern and what's going on. I mean, I was looking at just core numbers. We're constantly looking at these things, but I was looking at like the 50-day moving average, and I was just thinking, like when I think about the stock market, I think about the technology space just being so vibrant and having done so well this year, and I'm thinking about all the different opportunities there, and I'm thinking, hey, that's great. And I was looking at the QQQ, which is a great tracker, and over the last 52 weeks, it's up over 100%. And I'm like, oh, that's really great. That's a great return. And then I start realizing that that's like just on the generic list of things I'm looking at, quite a few down on the list, because I'm looking at the semiconductor space up 157% for the last 52 weeks. I'm looking at the Russell 2000, that's up 136%, and it's up like over 40% in the last 100 days. I mean, it's at an all-time high. I mean, these are real things that are all outperforming the NASDAQ. And I honestly got to tell you, this is a big deal. I mean, this is a big deal. I mean, you have things at all-time highs, and, that's one of our kind of things. Like, is it something where the euphoria is too big? Then you start looking at things like the energy sector. We're big into the energy sector, and I'm thinking about what does that look like compared to the NASDAQ? Well, the energy sector is up almost 94% over the last 52 weeks. The NASDAQ's up 100%. NASDAQ all-time highs. Energy, not all-time highs. And so I'm starting to look at different areas, and this is how we look at things. We look at consumer discretionary. That's actually outperforming the NASDAQ too. Where's that compared to all-time highs? These are real conversations that you need to have inside a portfolio. And over the 1 year, it's done great. And the consumer discretionary, all-time highs. These are things, folks, that you want to get help evaluating, looking at. If you want us to help you look at it, we're happy to. But sit down with a professional to evaluate this so you don't get yourself either stuck in the euphoria, the panic, or the loss.
You're listening to Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap.com. Folks, I got to tell you, this has been one of those shows for us that we loved. We've done a ton of work in this area, and we're very, very, very excited for you to be able to grab hold of what it is that we're talking about and how are we using this today to make progress. And at the end of the day, we're just, it's about what you can keep. Have you done what you've done in order to, have a successful experience in retirement? We hope so. And part of that process is understanding how to protect yourself and at what levels you are comfortable, taking risk or taking profit. And that's kind of where we were at just a minute ago. We're talking about taking profit because as the five stages of a bubble kind of move their way through, we want you to be on the profit taking side. We don't want you to be on this fear side of the equation, that you're just taking a ton of losses because everybody else has just decided to flee the market. Okay. And so if we can help you out, we'd love to. You can reach us again at 855-226-8551. We're going to see what we can do for you in terms of your portfolio and ultimately, big picture, how do you retire successfully?
Yeah. Seth, it's interesting with taking profits, people get scared. They think it's an all or nothing story. My son, we got an UPMA account. He loves to trade. He's enjoying it. I give a lot of supervision.
It's a great tool. I love that you do that.
Yeah. So, and it's honestly been an awesome experience to engage my son because we talk for like a long, long time. It's something I love doing. So, and he's really interested in it. So it's good. But what I talk to him about all the time, and he sees me do, I talk to him about how I trade and how I take profits all the time. He goes, Dad, that stock's still moving. Like it's still going up. I go, never know when it's going to pull back. And I'm never going to be at the top. I'm never going to sell at the top, and I'm never going to buy at the perfect bottom. And if that happens, it's going to be a one-time luck scenario. I tell him, I go, it's the massive trading volume that hits tops or bottoms, big buys or big sells. And those things are what create those peaks and valleys, not Ben Brayshaw. And you won't either. As a listener, you need to realize that nicking off profits from time to time is really, really good, even if you love the stock. Like I sold a quarter of my holdings in one stock, and my son's like, that's like a really good performing stock. Why would you sell? I mean, that's a lot. I'm like, I made a lot of money on it, and I want to trim. And that's a healthy thing to do. Now, what you consider a lot is just how you do it. It's, if I have friends that say, hey, listen, if I pick a stock and I make 20% in 30 days, I sell all of it. Well, that's their rule. I mean, never turn around because you made a profit. Never look back and say, oh, I could have made more. It's not the way it works. You have to have that core perspective.
Folks, if you have a portfolio and you're working in the marketplace right now, you're going to have gains, you're going to have winners, and you're going to have losers. Let me ask you this. If you have something that has just taken a dive, are you going to keep holding that in this expectation that somewhere down the road it's going to be the story of a lifetime and it's going to give me 1,000% return? Probably not. Get off of it. You know what I mean? Like, move your position from that to something that you can see the momentum, you can see the things that you really, really, truly want to hold and own. And that's taking a loss. And that can also be an asset to you because, right, gains and losses.
You've been listening to Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap.com. You can also find us at Facebook. We're at /3D Investing. We're also on Twitter at BFG_LLC. And as always, you can also find us at yourmoneyontap.com.
The views expressed are not necessarily the opinion of this radio station and should not be construed directly or indirectly as an offer to buy or sell any securities mentioned herein. Investing is subject to risks, including loss of principal invested. No strategy, product, material, or tool mentioned can assure a profit nor protect against loss. Please note that individual situations can vary. Therefore, the information, products, materials, or tools mentioned should be relied upon when coordinated with individual professional advice. Past performance is not a guarantee of future results. This show may be subsidized in whole or in part by a product sponsor or issuer. Securities and advisory services offered through SagePoint Financial Incorporated, member FINRA SIPC, and a registered investment advisor. All other services offered through Brayshaw Financial Group LLC are independent of SagePoint Financial. SagePoint Financial and Brayshaw Financial Group do not provide tax or legal advice. Main office is located at 116 South River Road, Bedford, New Hampshire, 03110, and can be reached at toll-free 855-226-8551.
Well, bye.